Hello, this is Megan Horneman, the Chief Investment Officer for Verdant's Capital Advisors. We're coming to you today with our regular segment of Markets with Megan, and we want to address some of the developments that we've seen over the weekend, specifically in the Middle East and the conflict with Israel and Hamas. We understand that the images and videos we've all witnessed over the weekend are just horrific. It's the only word that we can say to describe that. We're not geopolitical analysts, but we are market analysts, and what we're going to focus on today is what we've seen in the markets overnight, as well as the developments today, and some of the things that we're looking for going forward, especially as we continue to get more information out of the Middle East. First of all, the market reaction today was coming in this morning. Markets were down triple digits. This is equity markets in the U.S. Most of the international markets were down between 0.5% and 1%. We saw traditional safe haven assets like the dollar and gold. They rallied sharply today, but by the time the markets closed today, we saw a dramatic rebound in the equity markets. The other thing that we're watching today is the move we've seen in crude oil. Crude oil is up, but it's not as high as we saw 2 weeks ago when it did reach its year-to-date high. However, what the crude oil tends to always have be impacted when we have conflicts, geopolitical conflicts. So what we expect going forward is that oil is probably going to remain higher for longer, similar to our view on interest rates. What we're going to watch is from an economic impact, the direct and the indirect impact to our economy. From a direct side, we have very little trade with Israel. Our trade with Israel is about it's about 0.5% of our entire total trade. So from a direct economic impact, we don't see that at this time. However, the indirect impact, as we mentioned, can be on higher crude oil prices for longer. The consumer's already stressed. We've discussed that at numerous different podcasts. We think this will put added pressure again on the consumer. Also, from a confidence perspective, let's be realistic. This is an awful thing that we're all witnessing. So we're already looking at consumer confidence that's very shaky. So this can have an impact on the consumer at a time that we don't need it. From an equity market and bond market perspective, the bond markets are closed today. We'll see how they open up tomorrow. From an equity side, we will continue to watch the developments as they unfold, but we think volatility is probably going to continue for many reasons, not just because of the new developments with the geopolitical tension, but also all of the other factors we've outlined before. The economy's slowing, consumer confidence is weak, the consumer is stretched, businesses' confidence is starting to weaken, we have tight lending conditions, and now the Federal Reserve is going to be in focus, especially because of what's going on in the Middle East. Higher crude oil prices for longer can put upside pressure on inflation. So that's something the Fed's going to have to address. We still think the Fed has one more interest rate hike in them, whether it's November or December. That's not really a concern of us. We still do think they have another hike in them. We'll continue to keep you updated if we have any other information that we'd like to share as far as asset allocation and any other impact from the economy that we see from the very horrific activities that are happening in the Middle East. If you have any questions or comments, please feel free to reach out to podcast@verdants.com. Thank you.